Hey guys, what's going up? What's going on? Okay, so we are live. I don't have the link up yet, so I got to pull this up in order to be able to see what you guys are saying. Let's see here. Let's see. So guys, a lot of stuff to talk about today because I want to discuss some really exciting news being announced in the world of investing. Uber just reported. Is Uber back to positive yet? Okay, it's down 5.8%. They reported EPS of minus 32 cents, missing 22 cents, and revenue of 10.13, beating 10.11. But guys, here's what's amazing about Uber. This is their press release. Trips grew 21% year over year. Gross bookings 20% year over year. Income from operations of 172 million. Adjusted EBITDA 1.4 billion, up 82% year over year. Operating cash flow of 1.4 billion. Free cash flow of 1.4 billion. Now I'm going to show you guys the comparison to last year. The comparison to last year. Look at this. Monthly active platform consumers, 130 million last year, 149 this year, 15% growth. Number of trips, 21% growth. Revenue, 15% growth. EBITDA, 82% growth. Free cash flow, 148% growth. Now, this doesn't mean that Uber is a buy. I'm not saying if it's a buy or not a buy, but it's to explain the irrationality of the markets. Yes, they missed. Absolutely, they missed bad by 54 cents. I get it. But guys, if I owned a company where our income was down, but our free cash flow was up 148%, and all these other metrics came into place, and anybody on my staff said we had a bad quarter, I'd fucking fire them. I'd be like, you're out. Like, this is ridiculous. And the stock is down 6%. Now, what does that mean for you as an investor? It allows you to make better decisions because let the market overreact to these. I'm not saying Uber's a buy. No way, shape, or form am I saying that. All I'm saying is, if I had just shown you these things, would you have told me that Uber would be down 6%? Yes, they missed, but these misses not miss. It's like, guys, companies are going to miss. Companies are going to beat companies. No company in the world can beat every single time. And if they do, you got to start asking questions about their accounting. That's what I'm trying to sit here and say about these things. We're talking about Uber right now. We are talking about the Uber. Yeah, it's just unbelievable to me when I sit there and see these things. I laugh. Oh, Riaz, thank you very much on that compliment. Shopify. Let's pull up Shopify here. Is Shopify a Cathie Wood special? What percentage of her?
It was. Let me look it up on Stock Circle. I'll tell you how much.
Shopify is down 20%. 20%. All-time high was $176 in November of 2021. It's now $61, almost down 66%. Free cash flow, they beat 20 cents EPS versus 16 cents expected. Revenue of 1.86 billion versus 1.84 billion. What's the gross margins? 50%. So they're still trying to make money. Really high price of free cash flow. Guys, this is a growing business. 11.5 times sales. Feels expensive. Growing business. Let's see what analysts expect the growth to be. I mean, look at this revenue growth. 20% revenue growth right down the line. Man, it's just so funny to me. It's down, the double beat, and it's down 19%. They must be guiding poorly. Somebody can help me out there. Yeah. Shopify is hurting right now. Incredible to me. Just absolutely incredible to me. I just look at this thinking to myself like, wait, oh, there's my phone. Hang on a second, guys. Because I'm expecting a text from somebody soon.
So Cathie Wood owns 4.59 million shares of Shopify, about a $355 million value to her portfolio. So like 2.6% of her portfolio. Her average buy price was $70 a share.
So she's going to sell it soon.
Well, she's been selling it.
Has she really?
So she's been selling it throughout the later part of 2023 and early 2024. So she just sold 1 million shares in February.
I don't get this. How can you say you're an investor? And when a company that you own is doing better based on a lot of metrics, the stock price, you're not an investor then. So you're not an investor.
So why would you buy 6 million shares, Paul, at $128 a share in February of 21, but then go start selling 2 million, then a million, almost a million,
Tim,
then another
stop,
million,
stop.
and it's down.
Stop. February of 2021. Let's go look at the financials from February of 2021.
Okay.
Let's go look at those. The first quarter of 2021, they did $1 billion in revenue. They just did $2 billion in revenue in the last quarter of last year, and she sold. Let's see what the shares outstanding are, though.
And by the way, in November of 2020, she bought 5 million shares. So she bought 5 million and then 6 million in the course of 3 months.
This is not investing. This is not investing. And that's what I'm trying to sit here. This is what I'm really trying to focus on this channel, is this process of saying, you find the fundamentals, you follow the fundamentals and say, this is a company I want. Tim sent me a wonderful Peter Lynch video today on Instagram where somebody said to Peter, when do you sell? He goes, listen, you buy a company and you say, this is my story for the company. It's going to get to this size or this thing. And when that happens, you either sell, and I'm going to add something to him. He said you sell at that point. I sit there and say, you still have to compare the price to the value. If there's still a lot of upside potential, it could be mispriced still 5 years, 10 years down the road, maybe not as much, but if it still has upside potential and can still grow and get good returns on capital, then keep it. Keep it. That's the thing. And I look at this saying, Cathie Wood bought when it had $1 billion in revenue, and now it has $2.1 billion in revenue, and it did 1.85 this previous quarter, and you're going to tell me that you're not buying, you're selling? What the F? I don't get that. I really don't get that. I don't get it.
No longer disruptive when you make money?
No longer disruptive. Okay, Rob, while I answer Joey's comment, hey, Sal, how's it going? Do me a favor. Tell me what bone you have to pick with me, because I'd love to hear it. Joey, Charlie Munger described buying Wells Fargo after the great financial crisis as shooting fish in the barrel. Paul, is there currently a stock you own that you feel the same way? There is not. With that said, the great financial crisis, valuations were a lot lower. I'm sure there will be a time in the next few years, but I've been saying that for 4 years now, where I'm going to sit there and say that's like, I am worried that at some point in the future, there'll be a point where there's going to be too many stocks for me to buy. I have to decide which ones I'm going to own. I'd love to have that problem. We'll see, though. Everything Money used to say, women are better investors. Cathie Wood heard that, became committed to disproving that. Respect. Thank you, Matt. All I was saying was evidence has shown that women tend to do better than men in households. And I think a big reason for it is, I saw a video yesterday that was great about Warren Buffett. He said, if you buy mediocre businesses and hold them for a long time, you'll probably do better than even getting in and out of stocks. That's how important it is just to stay in investments. That's really changed the way in which I've invested. My view on how I'm invest has changed drastically since I started this channel, and I love it. The idea of paying more for better quality, the idea of holding for long periods of time and not having to do as much work. Oh my God, it's awesome to me. Seoul's Korea. Wow. Michael Wright. Why in the world did you insinuate Tesla having lower free cash flow last year is a red flag? So Rob, I get your point. Free cash flow when you're investing a lot into growth is a wonderful thing. And I think, maybe I didn't say this, but I'm glad you brought this up, because on a growing business, free cash flow being lower is not a concern as much. You should still ask the question, okay, let's see this, because they're growing, they're building factories, they're doing this stuff, that stuff, et cetera. I do understand that completely. So I don't remember what I said. But if I did insinuate it's a bad thing, I hope I said the caveat of, well, but they're still growing. They got a lot of factories to build, et cetera. Their free cash flow will be lower than their net income. It should be. No, you're absolutely right. They built a lot. Absolutely. Absolutely. Oh, you know what? You might be right here. Maybe she has net outflows. She has had net outflows. So she's got to pick stocks to sell. You're right. That is a factual statement. I'm sure that she has to sit there and pick what she's doing. Do I plan on keeping Love for the long term? Eugenio, is that how you pronounce it? Or Eugenio? It hasn't hit my thesis yet. When it does hit my thesis, I have a decision to make. The airline industry is a tough industry. I think Southwest has done a good job being the outlier in its operations. It's had a few years of bad results, bad operations. Hopefully that's temporary. And I'll have a decision to make at some point. If I want to be in the airline industry in general, I don't know what it's going to look like. There's only one industry I hate more than the airline industry, and that's cars, the automotive industry. So we'll see. No, C40 Blaze, that's exactly it. Shopify's numbers were not bad. They beat on earnings and revenue. So we'll see what happens. They're still down 19%. How's the market? NASDAQ is down 0.36. All right. So a couple things I want to talk about today, guys. Rob, Mo is currently on a golf trip. Rob, I watched the Tom Brady roast. Honestly, after Tom Segura went up, even Tom Segura and that other guy, I was just like, oh. The beginning part, though, I thought Kevin Hart did a great job. I think Nikki Glaser, like, if that doesn't take her to the next level on comedy, she deserves the things that her whole routine was fucking fire. Unbelievable, that woman. Oh my God.
Those clips.
Oh
I
my
saw
God.
a few clips here and there.
No, Nikki Glaser was.
Did you watch it, Nick?
I saw a lot of clips.
Nikki Glaser did the funniest thing about Tom Brady and Gronk about crypto. She goes, I'm paraphrasing. She goes, Tom Brady, and you lost $30 million in crypto? Like, how effing dumb is that? It's so obvious. Like, even Gronk said, me no crypto, not real money. And it was the funniest thing ever. It was, I lost it. It was great. I do agree with you, Dalton. I think he was I do think Tom Brady was a little B. But now, granted, I had heard that the only group that he said was off limits were his kids. So the Robert Kraft thing, yeah, I think he should have let that one slide. And I think Jeff Ross is a brilliant roaster. He is absolutely awesome. But anyway, some things I want to talk about before we go any further, before we get into that stuff. But I'm glad you brought that up because I love roasts. I think they're like the best thing in the world. Well, by the way, Dalton, no, I don't think it's because of her being hot. No, not at all. In fact, I think she got some work done because I thought her face looked incredible. So a couple of things I want to discuss here. Monster Beverage just launched a $3 billion stock buyback. Now, Monster Beverage, if you want to look at it, they got a great balance sheet. This is what I like about Monster Beverage. Monster Beverage has a market cap of $58 billion and an enterprise value of $55 billion. So they have more cash on hand, but it's an expensive company. 40 times free cash flow, 35 times free cash flow. If they're going to grow 10, 12, 13% a year and really drive that because they have a good profit gross margin, yeah, maybe so. But I don't think a stock buyback is some brilliant move here. To me, if you're not going to invest in the business, give a special dividend. I know, I just said special dividend. I'd actually rather have a special dividend than the stock buyback. I don't think it's obviously cheap enough to go be buying shares back. I could be wrong. So that's something I want to discuss. And I shared this article in the community the other day. I finally woke up to reality. I've been paying a percentage of my investments to a financial advisor for years now. I don't think it's worth it. Is 1% really fair? Guys, part of this channel's goal is to get people independent on their money management because you don't need a financial advisor. Does that mean financial advisors are not valuable? No. I do think there's a place for financial advisors, but I don't think plucking somebody from one sales job, putting them as a financial advisor means you should be listening to them. I think there are very few financial advisors who are truly financially competent to provide advice. Is there value to somebody calming you down when markets are rough? 100%. Is there value to somebody saying to you, hey, listen, you're close to retirement. Your mortgage is this, blah, blah, blah. There's all these things you have to discuss. But financial advisors who just sell product, that's not a financial advisor. That's just a salesperson. A true financial advisor is somebody who's going to sit there and when times are tough to sit there and say, this is what we need to do. We need to stay calm because let's remember this, that, and the other. But even then, is it worth 1%? I don't know. That's up to you. You got to remember, it's going to eat up a big chunk of your future value. And I don't say that lightly. Part of my goal for this channel was to let people say, hey, I'm going to pay Paul and everything money, $40, $50 a month. And instead of paying 1% a year to my financial advisor, I'm going to have thousands of financial advisors with me. That's the whole goal here. So I hope everybody sees that in this community because that's really what it's all about.
Paul, I saw an article, and actually, let me pose this as a question. Are stock buybacks a sign that
Yes.
the economy is healthy?
Stock buybacks, to me, if you look at the history of stock buybacks, I saw some chart in it long ago. Stock buybacks are up during market booms and they're down during market declines. It's literally backwards. People in the, I think I have this. Where is this? So let me pull this thing up. I've shared this before. Go away from my screen for a second. Okay. What did you put up?
Nick's just showing some merch. So, but this article, Paul, while you're pulling it up, on Yahoo Finance yesterday said stock buybacks hit their highest since 2018, signaling confidence in the economy. So I was just going to ask you, is that true or not?
Well,
so
if
guys,
people think stocks are, I guess if boards think their stocks are going up, then stock buybacks make sense. But I would argue against that.
So guys, while Paul's pulling up on the screen, Nick is showing you everythingmoney.store, where our merch is. If you buy anything in there, we'll get you an autograph of Paul and Mo, as well as there's a really great special we have where there's a combo in there where you can get a shirt, a Yeti, and a quarter zip. Same quarter zip that Paul's wearing now, you can buy if you want. Okay, Paul, you ready?
So the stock buyback. So this is something I've shared on Twitter. And by the way, guys, follow me on Twitter @EMPaulG. It's on the screen. Great. Where is that? Which bottom corner? What? My left hand? That way? Oh, yeah, right there. Follow me on Twitter. I love talking on Twitter. Twitter is amazing to me. I only joined 2 years ago, and I freaking love it. Stock buybacks. Here is the point. Let's say there's a company with $70 billion market cap, and they have 1.3 billion shares outstanding and $10 billion in free cash flow. And they're a boring company. They're only going to grow their free cash flow by 4% a year. Let's say, so that right now they're selling at 7 times free cash flow. Okay, 7 times. And let's say the long-term average will be 15. So over the next 15 years, they'll slowly go from 7 to 15 times free cash flow. Here's how much it grows the stock price. 23% per year. 23% per year, okay? Because over time, you take that cash flow, you buy back shares, and the multiple goes up. The multiple will go up higher and higher and higher, and your free cash flow per share will continue to increase. The market cap will only appreciate by 9.2%, but your price appreciation will be 23%. Now, let's change this just to make the free cash flow now, instead of 7, let's make it 28. Or let's make it 21, 3 times more. So free cash flow is now 3.3 billion. One more 3 needed. Now look, your price appreciation is only 8.2% at 21 times, which is an absurd number. Now, if that company is only growing at 4%, why should their free cash flow multiple be 21? Maybe if it's 20. Now let's say, hey, it's really supposed to be 20. All right, you still only get 9.6% appreciation in the price. Let's take it to a very stable company that has 35 times free cash flow. So it's 2 billion. But it's a premium company. It should sell for 25 times free cash flow normally. Look at this price appreciation, 5.4%. So buying expensive shares is not good for the investor. If it's cheap, they should do nothing but buy back shares. If it's like low double digits or high single digits free cash flow, what are you doing? One example to me is like British Tobacco. Look at BTI. This is a business that's not going to grow a ton. It's selling for 5 times free cash flow. 5 times free cash flow. They should be using every single dollar. Get rid of the stupid dividend. This is absolutely asinine. I want to go buy British Tobacco just to stop this dividend and just buy back shares. That's all they should be doing. They will generate so much wealth for their investors. It'd be unbelievable. That's what I mean about free cash flow. Well, I get what you're saying. So Ite's sitting here saying buybacks are king because the benefit's perpetual, even at high valuation. I disagree. As I just showed in that Excel sheet, let's do this. Let's go to an extreme. let's say it's selling for 100 times free cash flow. Even if they're going to grow their free cash flow at 7%, you're not getting appreciation here. Buying back shares. That's the problem we have. It's still, unless you think that 100 times free cash flow is the stable free cash flow multiple, which it's not. 15 is the market average. Put a higher amount, 20 or 25 for really high quality businesses that don't have a lot of growth. I don't know. It's hard for me to get around that. And this is a sheet I'm probably going to put on the software at some point just to let people use it because it's a great sheet to sit there and fiddle around with and see if it's good. It's not good for investors to buy back a lot of shares that are useless. Yeah, Joey, I am worried about that for management. It's funny because when a company announces a large buyback for the future of the stock, then shoots up. Yeah, I know. It's crazy. It's absolutely effing crazy. Just a young gun with the 13 years of prosperity without profits. Thanks, share buybacks. I love share buybacks. I think they're absolutely incredible if done in the right. I mean, literally no better way. Look at NVR. NVR, Ryan Holmes has like never sold for a premium to the market. They've sold a lot of times for high single digits, low double digits. They pay zero dividends. They bought back shares. The business is up 6 times, but the stock is up 100 times. That's it. It's just no brainer. Somebody at NVR really knows how to handle their cash flow. BTI, oh God, BTI. I wish they would do it. I wish they would do it. I wish they would do it. Oh, well. Yeah, Baba. Baba's doing a great job. I love the fact that Baba started announcing their buyback when the stock plummeted. It wasn't like they were like, oh, the stock's at 300. Yeah, let's buy back shares. No, it was like, okay, the stock is really in the dumps. Let's buy back shares. Awesome. Smart move. Very, very smart move. Oh, wow. I did not see that, Rob. Did Coke announce a big buyback? 30 or 40% of the company? Wow. Let me look that up. Coca-Cola stock repurchase. Oh, that's consolidated. Consolidated. Are you talking about Coca-Cola consolidated? Yeah, it's Coca-Cola consolidated, not Coca-Cola, the KO company. Yeah, in the long run, net income equals free cash flow over long run. You're right. Why do I like using free cash flow? Because on the off chance there's shenanigans going on, it's harder to manipulate free cash flow than it is net income. But with that said, if net income and free cash flow are very different, where net income's a lot higher, it doesn't mean you should ignore it. Go understand why. Because it could be a situation in which they're putting tons of money into fixed assets to grow the business. A lot of reinvestment that way. So you've got to understand that because that could be a very, very good situation for the company. Very, very good. That's the question you have to ask. Yeah, Joey, that's good. Their announcement. There's important use of free cash flow under certain circumstances, but they can also be market-driven, cycle-driven. Investors have tunnel vision that on the, yeah, I mean, people love hearing increased ownership. And by the way, the other thing about buybacks is if management is rewarded for increasing earnings per share, they don't care what they're buying back at what price. At the end of the day, they're still increasing earnings per share. That's the other problem with buybacks. They're using manipulation to drive up earnings per share, even though it's not good for investors at high levels. That's the problem. But investors look at it and go, well, I don't have that money anyway. It's in a bank account. Yes, you do have that money. You have an ownership stake in that bank account. You should care about how they manage that. Do you worry if pillar stock has low volume, like below 500,000? First off, remember, my pillars are only for, I don't care what the volume is. I have companies that have 10,000, 20,000 shares a day in volume. I don't care about the volume of a company. To me, it's all about what's the value there. And if it's less liquid because of low volume, I have a higher margin of safety. There you go. What's your guys' opinion on China? Well, I think the next 20 years, China will be a lot bigger than it is today. And that's my play on China. As simple as it is. Yeah, you're right. Not counting stock-based compensation. William, I think we did a video on Ambev, didn't we? There's one might be recent. Exclusive content in our community. And by the way, guys, remember, the community has limited spots every single day. We're not allowing a lot of people in. We want to make this exclusive like Ferrari, like Hermes, like Louis. We want it to be exclusive. So go sign up, click the link. It's $7 for 7 days. I think there's tons of people in this chat right now who are part of the community and they love it. And the tools are incredible. Most importantly, it's about having these conversations on a daily basis, understanding free cash flow, stock buybacks, etc. See you later, Joey. Pravir, you got to be careful on writing covered calls. I don't know what you wrote it at. You could always roll the covered call. Are you okay losing the shares, etc.? Do you think the earnings are over? Understanding the weakness of the consumer. That's a good question. I don't know. The consumer, I see some evidence where I go, oh, the consumer's strong. I see other evidence where I go, oh, the consumer's weak. You know, I'm not trying to guess what's happening in the economy anymore. I used to want to guess what's happening in the economy, what's going on. Is there a recession? And it cost me money. It cost me immense money, gains that I should have had. What do you think about Microsoft increasing their AI profile in Germany? Listen, AI is the thing right now. AI is the thing. You know, every company's got to be involved with it because if they miss on that one, they're going to lose out. AI is the big thing right now. Oh, thank you so much, C40 Blaze. I think you should. So here's the difference, I was doing it wrong. When I was doing the buybacks before, in my calculation, I was doing it wrong. What I need to do is say, how much of this free cash flow do you want to use for, because we don't know what future prices are going to be. So when I'm doing a discounted cash flow model, I'm double counting the cash flow. This was actually brought up by a user. They're like, Paul, aren't you double counting this? And at first I was like, no. And then I'm like, wait a second. Shit, maybe I am. And then I realized, yes, I was. So as much as I like the buybacks, it was inaccurate how I was doing it in the stock analyzer tool. So anyways, what else is going on in the markets right now? Anything? Well, NASDAQ's almost even. Dow's in positive territory. S&P is almost even. Let's see how Uber is doing. Down 7.3%. How's Disney doing? It fell big yesterday. It's back. It's up a little bit. Interesting. So what do you guys want to talk about? Is there anything specific we need to talk about, Tim?
Obviously, we talked about the earnings. If you're just joining, just after this over, you can go see what Paul said about Uber and Shopify. So we'll just take questions. Somebody was asking about CVS. Somebody's asking about Starbucks earnings last week. Ecuador.
What about Ecuador?
Ecuador's in the house. Greetings from Ecuador. Awesome.
Love Ecuador. We need a roast on Jay Powell. We need a roast on me. I'm not thinking about making an ETF for fun in the future. PDD, I just haven't looked into it enough. I probably should. Gen X retiree, Starbucks had bad earnings. When I say bad, like they missed. All right. I still think it's a company I want to own. I think the future is going to be better than it is today. That's the way I look at it. I haven't looked at Baidu enough to understand it. Is Intel before? I got my Intel shares. Remember, don't buy shares just because I have it. I think Intel is a long-term, quote unquote, risky play. It's not for the faint of heart. I think it's either going to crush or not do very well at all. I don't think it's going to be an in-between thing. That's my personal opinion.
What other shares did you get awarded? So we've done a few of these videos, guys.
I don't even pay attention.
Did you end up getting Starbucks or Nike?
I don't know. I don't pay attention, and here's why. If I start paying attention to that stuff, I worry that I'm going to make decisions that I don't want to make. I just let the shares fall where they fall, and I don't even pay attention to my holding size. I literally don't even pay attention to how many shares I have. And the reason being is, if a company becomes a bigger portion of my portfolio, I worry about selling a good company because it's such a big portion when you should let your winners run, and especially if the thesis is still good. I either want to be, I love this company, I'm in it, or I'm out of it. Not in between thing. I love the story, but remember, my goal is to have 30 or 40 companies, maybe more. Peter Lynch made a ton of money having hundreds of companies. He did great in the stock market having hundreds of companies. That's my goal. Paul, I know it's not really your thing, but if you were going to value small caps, what would be the most important metrics for you in that scenario? William, fucking love the question. What's most important to me in a small cap? And by the way, I do small caps. Dalton was hired. Part of his job is to find me small caps. I've bought 3. He's pitched me another 3. He's pitched me like 8 or 9 before. I bought 3 of them. My goal is I'm trying to find 100 baggers. So I'm trying to find long runways with high returns on invested capital. That's my main goal. That's my main thesis there. And hopefully they're good capital allocators. So even if the company is small, because remember, NVR was like a $200 million business in like 25 years ago. And now it's freaking 10 billion or 20 billion or something like that. So my goal is to find companies with a long run. The book, 100 Baggers by Chris Mayer, great book. And he makes it sound a little easy to get 100 baggers, but the whole idea behind it, I love. But remember, I'm putting such small amounts of my money in there. Like literally, I think I've put in 0.1% in each of the 3 company small caps that Dalton's given me. But my point is this: if I have 50 of them, I put in 5% of my money. But if one of them becomes a 100 bagger, it's just one of them does a 100 bagger, the rest go to 0. I still doubled my money. Now, granted, it wouldn't be a great return, but the point is, I'm not going to buy 50. Oh, shoot. Who the heck's in my house? My alarm just went off. Hang on a second, guys. Somebody's in my house. Oh, maybe it's somebody on the patio. Let me see. Hang on a second. I see view. Probably somebody on the patio. Oh, yeah. That's probably what it is. Whoops. Okay. Nobody's breaking in, I don't think. I don't follow any 13Fs. I mean, we look at them from a standpoint of it's fun to take a look at them. What are you laughing about, Tim? God damn it, Nick. Why are you so angry? That's what I mean, but you just want to go fight everybody.
He would do it with a smile on his face.
Yeah. He'd be like, you trying to break into Paul's house? It's 30 minutes away. Nick. Oh, boy. Jim, when do you harvest it? Good question. When the thesis is fully changed and the thing is up a ton. I'm okay running. Listen, if they're good capital allocators now, they'll probably be good for a long time. It literally, I basically am running like the venture capital thesis on my small caps. I'm basically sitting there saying, I'm going to invest in 10 and 7 of them are going to go probably to 0. 2 of them are probably going to do decent and hopefully 1 just explodes. But those 3 that do awesome are going to count for huge amounts of my returns. And I'll decide at that point when the story's played out, I need to go find other things. Cops format. Yeah. Where do I think the economy is right now? I don't know. Listen, guys, you know what the issue with the economy is? The amount of printing of money. I think I heard something like 50% of the money that we've ever printed have been printed in the last 4 years. Something crazy like that. I mean, that's inflationary. And, I don't know. It's a crazy number. And that doesn't mean that the economy is going to be bad now, but we are sacrificing our future. It doesn't mean we're going to have a massive recession or depression or anything like that. It just means that whatever growth we could have had in the future is probably going to be smaller now. But it made today's economy much more sustainable for more people. But if you think that we're on the cusp of a booming economy, a booming economy starts when unemployment's very high, when GDP is declining. That's when the booms happen. Not when unemployment's 3.8%. Not when we have nominal GDP growth of 5-6%. I don't know. It just doesn't add up to me. What's up, Romania? Paul, should I go to college? Yes, Tyler, you need to play the game, but don't think college is going to teach you anything. Go learn some more from somewhere else. Learn from us, etc. Paul, what's your biggest challenge when you decide to buy a stock? Oh, man. Damn, I really hate saying that cliche, good question, but probably pulling the trigger. Guys, I mean, I look at it going, I still battle my demons of, God, the market's so overvalued. And I just have to sit there and say, okay, well, I'm just going to be okay buying the company and seeing it fall. That's been hard for me to get around, but I'm really glad I've done it because I think it'll make me a better investor long-term, making more returns long-term. Oh, Matt Jones even retracted a message. Can you believe that? What do you have? Well, I know Mo isn't here, but you think Mamala is good? Who's Mamala? Oh. I'm not even going to answer that, Matt.
They called her Mamala. Yeah, that's it.
Jun, what is your longest holding period on stock? Well, currently, like 2 years, because I just started buying in the last 2 years because I was an idiot. But literally, I have the goal of holding for every stock I buy. I sit there and have that adage of, if the market shut down for 10 years, would I be okay owning this for 10 years? And the answer is yes. Every single company I own, I'm fine owning for 10 years. And I really feel good about that.
And you said it would actually be easier to invest.
Oh, investing would be so much easier if the markets were closed for long periods of time because you have no opportunity to sell when the smallest bit of bad news comes out. Look at Starbucks earnings.
It'd probably make a lot more millionaires.
Oh, 100%. This is why real estate does so well for people. You can't just go tomorrow and go, I'm selling my house. It takes time to sell a property, right? Plus, you have extra use out of your own personal residence. And you buy investment property, you have a tenant, and they're paying you rent, and hopefully you're cash flowing. And you're like, listen, my biggest thing has been forcing myself to pull the trigger on things. I think I've been too cautious to pull the trigger when some people are too quick to pull the trigger. So, like, for example, I just put in a contract on a condo in Dallas to do an Airbnb. I'm really trying to do this. And I'm sitting there saying, Paul, you butcher everything. You really try too hard to get the perfect investment. Go give this one a whirl. What's the worst case? You're wrong and it loses you $500 to $1,000 a month. Okay, but then you have a house, you have a condo to stay in when you go to Dallas because you're not going to be rented 100% of the time. So I was already spending $600 to $800 every time I went to Dallas to go rent a hotel room. So it's like, okay, that justifies the investment.
You don't like third-party management, and I get it.
Can't stand it.
But
Daniel's going to manage. Daniel's going to help me with the turn.
There you go.
Yeah.
I was going to say that's all. I was going to say there's people that are hosts because my brother-in-law Greg uses a lady to like help host some things. It's a little cheaper.
So he's riding her coattails.
He still does the property management part of it, but yeah.
That's good.
He likes it.
Lost Islander. Fuck. I would love to hear about your experience about Airbnb. I would love to hear about that. Yeah, that's great, Mojo. Joe Gaming. Oh, thank you, Kachang. What's your guys' opinion on investing in Latin America? Latin America, a lot of potential in Latin America. Just like, I look at how close it is, starting with Mexico all the way down to the U.S., how much the U.S. relies on these areas. Don't tell me they're not going to ride that coattail. Of course they are. If you want to, yeah, exactly, Jack. If you want a financial advisor, just subscribe to Everything Money, and guess what? It's a lot cheaper. A lot cheaper than a financial advisor. Yield and price management can have a high positive effect if a third party can do it right. Well, that's the problem. I've probably hired 10 third party managers in my career, and I've literally never found one that I thought was a good third party manager. Even one that came to me as somebody suggested and said, this is what I've heard the best, and I fired them in like 6 months. Guys, whenever I've hired third-party managers, I fire them. Guess what happens? Revenue goes up, expenses go down. They just spend too much, and so my expenses always go down, and the revenue, because guys, third-party managers want to tell you, I'm 98% full. I don't want 98% full. I want 90% full with higher rents, but they're too scared to charge higher rents. Mercado Libre. Yeah, the Amazon of Latin America. Large tech stocks only go up. Feels that way, doesn't it? Your admirer from Switzerland last time could not meet Hussein. Yeah, I'm wondering if that's the person we ran into at Seth. I don't think that's him, though. Latin America stock prices fluctuate a lot based on what party is in office. Well, maybe so. Where's your new channel, Paul? Everything Money 24/7 is this one. You're on it right now, Jun. Yeah, you're on it right now. That's great. Subscribe, guys, to our new channel. This is the new channel, Everything Money 24/7, baby. March 1st, we had 0 subscribers. We now have 6,700. No shit. Wait, what? You're the guy who saw me? What? No way. No way. Is it really him? I thought he was from India. We're invited to the wedding, Uncle Paul. Guys, like nobody's invited to the wedding. Wasn't there another new one? Yes, but we're starting a real estate one soon, but we are not telling anybody about it because that's what our consultants told us to do.
By the way, and if you're really excited about it in the next couple of weeks, actually, no, I'm not even going to tell them. We just want YouTube to push it to you. If you love it, it'll push it to you.
Oh, you're not the guy we met. You said we were going to meet in Zermatt. Oh, sorry about that. Just a young gun with the quick fuse. I love that song. Yeah, that's right, Vitor. This is a great statement. In a bull market, everyone's a good investor. Just let the bears out and you'll see. And guys, this is not about letting the bears out and being negative about that. I know that's not what you meant here. Anybody can make good money when times are good. You really have to check yourself in business, in life, and anybody can be a great husband or wife on your wedding day, on your honeymoon. Question is, 10 years in, when you have 3 kids running around the house, things are stressful, you've been at work all day, or your wife's been at work all day, you have to come home. That's when you find out how good of a spouse you are, right? It's not based on wedding day or when you get engaged. What was that, Tim?
Yeah, tough times. You'll see who people are.
Yeah. You know, it's funny. There was a show called $1 Million Listing LA. You guys all know this show. There was a guy named Madison on there a few years back. I couldn't stand Madison. Madison was the worst. But this is what I loved because this guy called him out. And of course, these are all made up stories. But the thing I loved is Madison was meeting with this like Russian guy to do offers. And the guy that Madison's talking to goes, listen, you need to put in full price or above price offers. And the guy looked at Madison and said, if I need to put above ask price or full price, what do I need you for? And Madison just sat there looking at him and go, exactly. When markets are good, that's what I always say about realtors. They're always bragging when markets are good. Look, I got this price. Like, no, the market, because when the market goes bad, they're like, oh, the market sucks. That's why the price is lower. It's like, you can't take the benefits here and not the negatives here. Same with stock investing. When the markets are good, everybody's up. When the markets are bad, everybody's down. The question is, when the markets are bad, what are you doing during that time? Are you buying more companies? That's what tells me if you're an investor or not. Are you doing what you said you would do when times were good? But when I told you, what about when times good? You know how many times I've heard from people, oh, stocks fell in half. I'd buy a ton. No, you won't. Most people won't. I think that China has, over the last 20, 25, 30 years gotten much more accepted by the Western world. Just look at how many billionaires are in China. Look how many millionaires are in China now. Like it doesn't have, I mean, look how many Americans like even do business with, of course it's been accepted more and more. And guys, as the world economy, as globalization occurs more and more, as technology occurs, as we start getting planes that go 2,000 miles per hour, you can get to China in 6 hours instead of whatever, 13, 15 hours. Of course it's going to be accepted more and more. That's China. They're going to be a force to be reckoned with in a good way. Why would you ask that question, Aiden? Where have you been? I want to address this. Is Seth there? Where has Seth been for the last 2 years?
It's been 2 years.
It's been 2 years since we let him go. 2 years. Where have you been? No, Seth is not here at all. And I'm just like, I just laugh at it when people ask, where's the bearded guy? He got fired. Not trying to be a dick. He got fired. And I loved him. We all loved him. That's how important it was for us to move on. More countries are switching from US dollars to yen. Thoughts? I have no thoughts on that, to be honest. You don't speak about the company for a long time. Any wrong there? What are you talking about, Daniel? Oh, Valet. No, it's a commodities-based business. And for me personally, this is my bias showing up. That's why the community is so good to join that, because there are people in there who understand commodities. I just prefer not to buy commodities-based businesses, except for I have gold ETFs on gold mining companies. That's it. $12 midnight. Wow. My cousin, Yusuf, he messaged Seth on LinkedIn. He never responded. Oh, all right. My cousin, Yusuf, is in Japan right now on a trip for 2 weeks. Because he messaged me at like 4 o'clock in the morning, U.S. time. I'm like, where the hell what are you doing? He's like, oh, we're in Tokyo. I'm like, what are you doing in Tokyo? I was like, geez, oh, Pete. Seth had a soothing voice. Yeah, that's true, Gene. You're right. Them talking about Seth just means your old videos are still getting views. You're right. Good call. Shopify is selling off. Good question. They beat on earnings and beat on EPS. I don't know why they're selling off. Unbelievable. We do that, James. We talk about technical analysis. In fact, one of the biggest criticisms people have of me is, how can you be a value investor and still believe in charts? I just believe there are multiple ways to skin a cat. And I'm not sitting there saying that it's a better way than value. It's just a different way of making money. Just like when people say like, oh, I'm a real estate guy. I'm like, no, I'm an investor. And if I see a process that works that can generate returns, then I will entertain it. Options. I do options. You know what I mean? I have no plans for Switzerland. Dan, I am done selling short, my friend. But you can profit that way. All right, what time is it? It's 10:47. We got 12 more minutes to go, guys. What you guys got? Oh, no problem, Mojo, Jojo, and Gaming. Yeah, I imagine they are on the same time, Michael, right? What are you laughing about? It's just hard. It's like Mojo, Jojo. Predictions on CPI next week. I have 0 predictions on what's going to happen next week. I imagine CPI is either going to come above, below, or right in line with estimates.
I just want it to come above. I just like to see things.
Yeah, I would love it too, but...
And then the market will soar.
Yeah, exactly. Yeah. Kashkari came out yesterday. I think people are just starting to hate Kashkari. Oh, so do I. I think my bias is the fact he's from, right down the street here, but he came out and said, I'm not completely limiting the chance of a rate hike. Can you imagine what would happen if they hiked rates? People would shit on them. We talked about Zim for a long time. Remember I talked about how the fact that shipping was extremely exaggerated. And I was just like, listen, I want to wait for the revenue to be more stable. After COVID, revenue skyrocketed. It cost $5,000. It used to cost $4,000 to $5,000 to ship something from China on a container. Then it was $25,000. So we were like, pump the brakes here. Mo actually made a lot of money on his charts on Zim.
Yeah, we did a video on that.
Yeah.
He made a lot of money on it.
How did I meet Mo? My brother knew Mo. So here's an interesting story. My brother met Mo through a mutual friend. My brother went to college at Miami of Ohio. He had a friend named Nick. So one time, my brother was living with me partially during college, like as he came home. So one time he invited Nick over to my house. Nick comes over with Mo. So Mikey and Mo meet. They're like, oh, hey, how's it going? They're talking. And it turns out they're both like, oh, my dad's a doctor. Oh, what kind of doctor is dad? Oh, oncologist. My dad's an oncologist. So like, oh, so they both texted our father. Like Mikey texted our father. Mo texted his father. Like, hey, do you know blah, blah, blah? And both said, yeah, I've known that guy for 20 some years. So they knew each other. That became friendship. I met Mo for the first time. He claims I met him before. I don't remember it. I met Mo for the first time that I remember at my brother's wedding in 2016, literally in passing. It was like, oh, hey, Mo, I've heard about you. Nice to meet you. Then Mo bought a house in my neighborhood like 2-3 years later, and we became really close friends. He would literally walk to my house. Like Lisa would come over. Mo would swipe on Bumble. Lisa would take his Bumble. And then Lisa's like reading this girl seems nice. She likes reading. And I'm like, Lisa, is she cute? Yes, then swipe right. Is she ugly? Yes, then swipe left. That's what Bumble's for right now. So Lisa's like, you got to give these women chances. I mean, no, you don't give any chance. It's purely superficial. Then you weed them out later. That was how we met Mo. I went to high school with Seth.
Is that where he met Nicole was on Bumble or a
Yeah.
different one?
Yeah, and I was, and here's the best part. Mo met Nicole on Bumble. The day of the date, the night of the date, Mo, Matt, and I, Matt being my chess coach buddy in Minnesota, we're in a group chat on WhatsApp. Mo's like, she's late. And I was like, leave. And it's like, she's 10 minutes late. I'm like, leave. 20 minutes late, leave. She finally shows up 26 minutes later. She texted Mo and said, I'm just parking my car. Like, they're supposed to meet at 7. At 7, she texted Mo and said, I'm just parking my car. Turns out later, we found out later, she hadn't even left her salon she was at getting her like nails done or something.
Wait a second. She said, I'm parking my car
Yeah,
at 7.
she hadn't even left the salon
what time
yet.
did she show up?
At 7:26. I told Mo, I'm like, drop this girl. It's
So she
not
must have
worth
drove
it.
fast.
And then, it was worse.
Yeah.
So then he goes on a date with her. So he goes on that date. She shows up finally. He said he had a good date. He's like, oh, I like her. So then I had a date from Bumble. This was when Lisa and I were broken up. I had a date from Bumble. So we decided to go to a couple's date, but then a third, couple showed up. So we're all at the date. And you got to understand, Nicole is so fun. She's a great person.
Yeah,
we have a great time.
Yeah, she's great.
We have a great time with her. The first time I met her, she was like a dud. It's like she didn't say anything. I'm like, this girl sucks. I told Mo later, I'm like, what do you see in this girl?
She might have been observing.
What was that?
She might have been observing.
That's probably what it was. Well, I was also hogging the conversation, of course, talking about my circumcision, my adult circumcision, and I was talking about that because they were all like pharmaceutical reps, and they all knew
how Nicole. What does Nicole call you? She does the impression of you,
Paul Goldstein.
Paul Goldstein.
Because I walk around like this.
It's epic.
Yeah, it's funny.
It's epic.
Yeah. Paul uses Bumble just like he invests. No, is it? Please explain that. Speaking of rate hikes, do you think the Fed believes we should hold? Yeah, that's a really good question. I think the Fed wants to raise rates and they're just a little too afraid to do it. That's my opinion. I have no reason to believe that. Wait, there was a Boeing crash this morning?
No way.
That's what Tyler's saying. I don't even know what pink stock is. Was there a plane that crashed this morning?
Boeing 767's plane nose crashes onto runway after emergency landing.
What city?
So it looks like it was a FedEx plane. So
where at?
Cargo.
In Memphis?
No, Istanbul runway after its landing gear fails.
Oh boy. So really quick, Buffett's cash pile is 180 plus billion. Guys, I put this on Twitter. Follow me on Twitter. I put a poll the other day. I have zero negative desire to go to the annual meeting. Like literally negative desire. I'm trying to think of how much it would cost me, how much it would cost for somebody to tell me go to the annual meeting. Like literally, I think it would take like.
Hold on, and you said no. We were going to try to get together with Guy and Monish together at the annual meeting, and Paul didn't want to go. Guys, that was going to happen.
I have I look at that whole event as a bunch of people circle jerking each other saying, hey, I'm a value investor because I repeat what Warren Buffett says. Yeah, cool. What do you own? I own crypto. I own this. Come on, stop with this.
But there's Dairy Queen there.
There is Dairy Queen, but there's Dairy Queen near my house too. Actually, there's not a Dairy Queen near my house. I have to go like 11 minutes away.
No, that's a scam.
Yeah, that is a scam. I haven't looked at Honda in a while, but I think that some guy was interviewing a value investor on CNBC, and he said something like, do you think that Warren Buffett's cash pile says that, he's like, do you think that Warren Buffett thinks the market's overpriced? And he's like, and then he said to him, I'm like, well, yeah, duh. If he didn't think market's overpriced, he would have a lot less cash on hand. That's it. At least now he's making $10 billion a year on that cash pile. What do we got here? We got 5 minutes left. GoPro. I haven't looked at GoPro in a while. I do like GoPros. I think they're great cameras. Just a young gun with the quick fuse. By the way, for those of you who don't know, this is our Everything Money 24/7 channel. You got to subscribe. It's a great channel. We love doing videos here.
Yeah, and actually, if you guys see any kind of crazy news at all that's going on in the stock market, just email us, help at Everything Money. We potentially will do a video on it. And we're monitoring things like, just like Uber being down today and Shopify being down today. Those are the kind of videos we're going to do really quickly when the news hits.
Yeah. So that's why we did that for this video, because these go out and these stay out for how long do we keep these live streams out for, Tim?
We're going to keep this one out, period.
This is gonna be a
in the
permanent
event that, the only way I'll unlist it is if we end up doing a 4:00 video.
For whatever reason.
Yeah. If there ends up being earnings today or somebody misses or it goes up big.
What is the market doing right now? Everything's back, baby. Oh, one thing I want to talk to you guys about. This is interesting to me. Ready for this? Since the January 2022 highs to May 1st of this year, so just last week, if you'd invested in treasuries, you got an average of 3.98% in 90-day treasuries, which is a total of 9.29% since January 1st. The S&P till May 1st, including dividends, 9.29%. So 2 years and 4 months ago, 2 years and 4 months, you would have been the same return investing in treasuries on average versus the S&P.
Yeah.
That to me, that's what I mean when I say to people, like, it feels like we're booming, but is this booming? Now, have there been companies in between that have skyrocketed? Yeah, NVIDIA, all these things. Go ahead, Tim.
A lot less emotion involved with the first one.
Yeah.
Where most people would be fighting emotions with the S&P going, yeah.
Yeah, this is not a lot.
Sideways, yeah.
This is 3.98% per year, including dividends. So, guys, at some point, people will say, where's my return coming from? Look at Tesla. Prime example. Tesla was 414 down to 170. People are losing faith in it. Not everybody. They still haven't lost their full faithful, but it'll happen eventually. It always does. Everything goes in cycles. Everything goes in cycles. I cannot stress that enough. Guys, 2 minutes left. What's Airbnb going to report? I wonder what they're going to report. So I have an issue. I want to buy a lake house in Georgia, but the place I want to buy in doesn't allow short-term rentals. They don't allow anything less than a month. Nick and Tim are just staring at me. So I got to figure that one out.
There's got to be a way around it.
Well, so what it is, there's like the lake is like this. Right? This is the worst thing in the world. This part is a county that does not allow it. This part does. The problem is the houses on this part aren't nearly as nice as the houses on this part. So it's like, I shouldn't say they're not nearly as nice, but the area over there on this county is way better. So I thought about things like, do I give them a lease for a month and then they have an opt-out after 1 week? I don't know. I've thought about loopholes, but it's just a matter of time before, because the problem is, what if somebody goes, yeah, I'll stay an extra week and I have a renter coming in the next week? Then you're screwed.
This is the one that you were trying to get Mikey and Mo to buy a piece of.
Yeah, that one's sold already in like 3 days.
Oh.
I wanted to buy, there was this house that came up for sale that was absolutely perfect. It was 6 bedrooms on the water, 275 feet of lakefront, brand new, furniture included, beautiful pool. So I said it to Mo and Mikey. I'm like, guys, can we just split this 3 ways? They're like, no. I'm like, F you both. I hate you both. You're the worst. 7 golf courses now. I'm like, you're the worst. And I'm like, but if you guys change your mind, then I take that all back.
Wouldn't your dad love it? Well, he likes Arizona, right?
He likes variety, so I think he'd like that kind of community because he'd have the variety of golf courses.
Go stay for a month.
Yeah.
Play golf.
Well, then not for a month. Dad's not a month kind of guy.
A week guy.
Dad's a 4 days, 3 days kind of guy. Because Dad works still.
So he's got to hustle. He's got to hustle those golf courses.
Dad's 72 years old and he would play 36 holes a day, no problem.
Holy F.
Yeah, he loves it.
He's got to go.
Oh, thank you very much, William. Have a great weekend.
Why wouldn't Andrew go in on that?
I don't think Andrew has the liquidity for that.
Is it closer to his
Andrew's
parents?
net worth is tied up in this business value and real estate value. He doesn't have, $5 million cash.
Well, nothing wrong with that.
No, there's nothing wrong with that. But I'm just saying, Tim, you own a piece of everything money essentially if we were to sell it or something like that. So that's a big chunk of your net worth is tied up in this. It's just if I can't go to you and be like, hey Tim, you want to be a partner with me on this one?
We could. I'll give you $1,000.
Yeah, exactly. The solution is a monthly timeshare. All right, guys. Everything's all done. Thank you very much for being part of our community. If you're not part of our community, click the link below. There's a limited number of spots. I'm sure that spots have been taken since we started this live stream. So go check it out. Thank you very much for your time. See you next week, potentially. We might do it next week, might do it the week after. See ya.